And I've been predicting 1 million for maybe 2 years now, because all of the factors to catalyze that shift to 1 million are here, right? The previous dull factors for bull runs has been exchanges and their inability to onboard a lot of people quickly because they're bottlenecked. But with ETFs, I think this is the key factor in my theory, is that there is no bottleneck anymore because the ETFs can accumulate any amount at any time because they'll buy on behalf of the users. So you mitigate that retail barrier that kind of stymied previous bull runs. And the matter of the 1 million run is just time. And things can delay it, like crypto heating up, I think will always delay it because people allocate capital. Even serious investors might allocate capital. Like I think Cathie Wood was buying Ethereum treasury companies, right? All of that has to come back to Bitcoin.
One of the most vocal supporters of a Bitcoin supply shock is Samson Mow, but his justification goes much beyond rhetoric. Mow claims that the Bitcoin market is about to experience institutional-level scarcity, something we have never seen before. The available supply on exchanges is falling as a result of long-term holders refusing to sell, and ETFs purchasing more quickly than miners can generate. However, Mow cautions that the majority of people are still unaware of how combustible that configuration actually is. He clarifies that even a tiny increase in demand might set off a major repricing event that would push Bitcoin to unprecedented heights. Mow argues this isn't just about price action, it's about the global monetary shift underway. Governments are drowning in debt, fiat currencies are eroding, and Bitcoin is emerging as the only credible, decentralized alternative. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Right, so I'm very bullish and I have a very bullish thesis, but I've been kind of mildly bearish for the last maybe 5-6 months, just because I've seen the alts and meme coins running very hot. And just historically, when that happens, we come back down, and this is exactly what we saw. I think there's been a lot of capital flooding the markets with altcoin treasury companies and the like, and I think it's just been a massive distraction. It was always due to overcorrect, and I think that's where we are at now. And Bitcoin usually will come down with everything else when it comes crashing down. And we hit 107-ish today, so I think this is probably a good correction. Also, we saw a massive amount of liquidations, also largely due to alt speculation over the past 3 days, maybe. I think people were getting liquidated 5 or 6 times, right? The big crash liquidated them, and then they went long again, and then they got liquidated, and then I think maybe some shorted the market, and then we went down again. So it's been a wild ride for a lot of these traders. I think when a lot of this capital is flushed out, that's when we have more solid price discovery and sounder footing to go up on. As Bitcoin matures, we're going to see less volatility. And this is a function of, I would say, 2 things. One is the Bitcoin treasury companies, especially Strategy, which has scooped up a large amount, and they are a very consistent, a very reliable buyer and at any price. The second is the ETFs, the Bitcoin spot ETFs, largely IBIT. And they have also proven to be a very reliable source of demand for Bitcoin. And I think with these 2 driving forces, it was always bound to reduce volatility, at least in the near term. But longer term, I just don't see Bitcoin sitting idly in this range or even in the 200,000 range. And I think we're seeing a foreshadowing of this with gold, which is the largest asset on the planet, which has skyrocketed and went up by 50% this year. It would be more like Bitcoin's trying to lull everyone into a false sense of security that they have time to accumulate. But unlike gold, Bitcoin is incredibly scarce and finite. There are only 21 million coins. Gold production will ramp up as demand increases, and we will see that. And we just don't know how much gold there is out there in the world. It's impossible to mathematically, definitively quantify that, but you can with Bitcoin. So I think we're going to see Bitcoin do its thing. It'll mirror gold, but probably in a more spectacular fashion. And I've been predicting 1 million for maybe 2 years now, because all of the factors to catalyze that shift to 1 million are here, right? The previous dull factors for bull runs has been exchanges and their inability to onboard a lot of people quickly because they're bottlenecked. But with ETFs, I think this is the key factor in my theory, is that there is no bottleneck anymore, because the ETFs can accumulate any amount at any time because they'll buy on behalf of the users. So you mitigate that retail barrier that kind of stymied previous bull runs. And the matter of the 1 million run is just time. And things can delay it, like crypto heating up, I think will always delay it because people allocate capital. Even serious investors might allocate capital. Like I think Cathie Wood was buying Ethereum treasury companies, right? All of that has to come back to Bitcoin. And I think all of it will be very violent. I also have another theory called max pain theory. And that is like the most painful outcome for the most people is the most likely outcome. So if we think that Bitcoin volatility is always going to be low, and we just gradually step up to 1 million and to 10 and to dollar parity with sats, that is the best case for the world. Everyone has a long time frame to accumulate. Everyone has time to buy. And I don't think that's going to be the case. And I think a lot of people realize this. If you look at Saylor and Strategy, he's buying anytime. Like it doesn't matter if it's a top. He doesn't care about dips because there is this urgency because the time is running out to buy Bitcoin at these low prices. So we're going to see a fast run up, and gold is a good parallel for what we're likely to experience with Bitcoin. If you look at the picture circulating right now on the internet, there are people lining up, forming queues to buy gold, and gold is at an all-time high. So nobody wants Bitcoin when it's in the low 100Ks, but once we get to like $500,000 per Bitcoin, I think the world's going to wake up, central banks are going to wake up, and nation states are going to start joining the race. And that's when you go to 1 million very quickly and beyond.
Jan 3, Samson Mow's company has been discreetly assisting countries in implementing Bitcoin at the state level. They have already spoken with about 5 or 6 central banks, urging them to include Bitcoin in their national reserves. Election cycles, politics, and scandals have slowed down progress. However, Mow thinks that once a significant nation makes the decision, it will set off a global chain reaction, and he believes that 2026 may be the year this starts. In the meantime, Mow highlights a single, unambiguous message for individuals: purchase spot Bitcoin and maintain self-custody. New policies like taxing unrealized gains or limiting asset movement may be implemented as governments deal with growing debt and revenue concerns. He claims that having your own Bitcoin is essential to achieving true financial independence and the best defense against governmental control. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Sooner than later. So every day I wake up, I'm expecting we're going to see like 100K Omega candle on the charts because it's been suppressed for so long. Like we should probably be at 200,000, I think is a fair market price based on demand. And if you look at inflation, just if you assume inflation, I did a calculation, real inflation is probably 11% or something like that if you base off of eggs. And if you factor in our previous high peak in 2021, we're just keeping up with inflation. So we're kind of tracking M2. We're maybe tracking gold a little bit, but we're nowhere near where we should be in terms of real price discovery happening. So I've theorized about this before, that you might have a bifurcation of the Bitcoin network or a split between approved Bitcoin that sits in treasury companies or with corporations, and then you have free Bitcoin, which is free flowing and people are transacting it as money and self-custodying it. And that's still a possibility down the road. I don't think it's a near-term phenomenon, but down the road definitely is possible. But I would say Bitcoin moves in cycles, not the price cycle, but just in terms of adoption and usage. And you see spikes in high transaction volumes, high fees, and then there's mass panic that, oh, it's too expensive to transact Bitcoin. And then you have lulls like now, which is a period of less activity. People are not really transacting on chain, and in part it could be due to other layers of Bitcoin like Liquid, like Lightning, or just transacting on centralized exchanges and through custody swap agreements with custodians and whatnot. But I think this is just a temporary phenomenon, and as you get more Bitcoin adoption, especially in the emerging world, Latin America and Africa, where people don't have access to those vehicles, they're going to be forced more or less to hold it in self-custodial wallets or just a wallet of their own. and that will lead to on-chain usage. But it's a interesting phenomenon. When it's busy on-chain, then the sky is falling because fees are high. When it's low, then people say, oh, there's no one to pay the miners and there's no security budget. But I think overall, Bitcoin does manage to balance out both sides eventually. But there is a skewing of Bitcoin development priorities towards layer 2s, which I think means we need to make some adjustments to make spam reduction a thing on the main chain too. Because if everyone's working on a layer 2, there's not much incentive to transact on the main chain, especially if people are spamming the chain with JPEGs and NFTs. I don't think there's an immediate need to be concerned. This is more of a directional disagreement, I think, within the Bitcoin community. So there are a lot of discussions and arguments out there about op return and other things. But looking at the discussion from a very high level, my conclusion is it's really coming down to the direction of Bitcoin software node development. Is it hardening it and reducing attack surface and making it sound money and focusing on sound money, hard money? Or is it adding more programmability? Because that's just the root of the issue, right? A lot of these changes, like the removing of op return and removing of filters, is to encourage or help layer 2 protocols that require new things. There are a lot of layer 2s that don't require new changes to Bitcoin, like Liquid, RGB, those are 2. But there are new ones, and there are theories of more in the future that will require more changes. And if you look at Bitcoin core development, they have a lot of soft fork proposals out there to add more programmability to Bitcoin. And I think this kind of is at odds with the idea that we're hardening, fixing bugs, fixing security issues, and kind of hunkering down. So this is really the divide, and I don't think it's going to kill Bitcoin. There are obviously people that are saying that, but it's more of a directional thing. And I don't believe there's ill will from the core developers. It's really just different priorities. There are no soft forks to fix spam or reduce bloat on the main chain, but there are a lot of proposals for soft forks that restore opcodes, restore more programmability, more expressiveness, moving towards more Ethereum-like capabilities for Bitcoin.
Samson Mow notes that while some developers want to enable sophisticated Layer 2 protocols by adding additional features and opcodes, others think this could compromise Bitcoin's fundamental simplicity and create attack surfaces. He emphasizes that this argument is not harmful because it is a natural conflict of interests among engineers who all want Bitcoin to be successful. Mow also talks about nation-state adoption of Bitcoin, which is one of the main goals of his company, Jan3. He discloses that they have visited with 5 or 6 central banks to persuade them to include Bitcoin in their national reserves. Politics, scandals, and elections have slowed progress, but he thinks a tipping moment is imminent. A global domino effect might begin as early as 2026 if one large nation makes the move. Lastly, Mow addresses individuals, stressing a straightforward yet impactful message: purchase spot Bitcoin and take ownership of it. He cautions that governments may try to tax unrealized gains or apply other restrictive measures if they grow more desperate to sustain themselves. He claims that having control over your own Bitcoin keys is the only effective defense. In a period of escalating budgetary turmoil, self-custody is not only about independence, but also about safety from government overreach. Essentially, he believes that Bitcoin is the only real asset that can hold its value throughout the impending global financial crisis. He claims that the global economic system is about to collapse, and that only assets with genuine scarcity, neutrality, and security would survive. He believes that asset is Bitcoin. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.